Hello guys, it's Thumper here on Financial Options, and today we're going to be talking about the shopping list for next week, May 10th, 2021. And the first thing I want to do was take a look at the previous week to see how those are doing so far. So, what I was actually kind of surprised to see, given how the market behaved, is that a majority of those positions, had you opened on Monday, you could have closed them for profits, and if you did like the same amount of contracts on those tickers that I had up here, you would have made $302. Like, pretty neat given the fact that the market was, in a downward trend this week. Uh, I guess troublesome positions from last week's shopping list would be Zoom at 260. Although I'm still confident in this play, so I'm not worried. We have until 611 on this play for it to become profitable, and I still think 260 is pretty safe for Zoom. So I wouldn't be worried about that 360 paper loss yet. And then the RK ones went against me this week. I actually think I did put on the ARC 105 this week. So I'm holding that position with y'all. But that's down about 100% from when we opened it. But at 105, I think that'll be fine in the end. If not, we can always roll ARC later. So from last week, I think I put on the Coke and the ARC positions. I already had Microsoft and Zoom positions in play. I even had an ARC K already, but I did put on another one after doing that shopping list. All right, so now that we've done that, let's look at this week's shopping list. And you can see I decided, I'm gonna double down on the Zoom one and put this up here. If you're not already in it, like, I still think it's a decent play. Premium's up. I thought it was a good play last week for this strike price and this date. Now you're getting even more premium. I still think it's a good strike price and date, so I mean that's a nice bargain if you're still looking at Zoom at 260. But because of the increased premium, why not go safer? You can do the 235 on the same date, collect a $320, still a 1.36 position or return for like a month hold. So that's where I am on Zoom. If you looked at my other video, you'd see that I already had a Zoom. I was playing way close to the money. I decided to do the double down roll and get down to the 260 mark. I think I have it on the 618, so 1 week further out. But I still think 611s are good ones if you're not already in Zoom. AT&T. I like playing AT&T. It tends to be a safe one to play. I had 100 shares called away on Friday at the 31 strike. I'm fine with wheeling it, so I'll be opening up a new one next week, selling a 625.31. It's a bit longer dated one, but it's AT&T. You have to go out further in time to get decent premium, and it's under the 70%. But this is one that I'm fine running the wheel on. You still get your 1% return depending on how much fees take out. What's neat about selling puts on positions you want to own is it's kind of like being paid to wait for a discount and you get free shares. So like, if on Monday open I want to get those shares of AT&T back, I'd have to buy them at the current price, 32.16. But since I'm doing it through an option contract, I'd be buying it at 31. So it's a savings of $116 to wait a month to take T. I don't think that's a dividend being paid out at that point. So like, why hold the shares even? On top of that, you're getting paid $34 to wait. So combined, that's $150 by just waiting to get into this position. And another neat thing to think about is what would that be in terms of shares if I was to buy those at 32.16? Basically, I'm buying 95 shares and almost getting 5 free is what this is kind of like if I just wait a month. So buy 95, get 5 free. It's just something that's neat to look at when I'm looking at contracts. I love it when the premium received is more than the strike price. So it's like you get one free share kind of thing. All right, moving down the list, we got Netflix 460. I'll probably actually put this one on because I'm not in Netflix currently, and I think it's just a decent play right now. Looking at the Netflix chart here, I think this is the 1 year. I want to be in a position where I can roll down to kind of catch like this next support or where this next volume comes in. So in the event that it does decide to tank, like you're finding some price action in the 450 range. And I think I put the 426 up there, didn't I? The 460, sorry. Yeah. So $10 away, we can roll down to get underneath that action if this becomes a problem child. And it's because it's so far away and it's a little safer, the return's a little less than what I would normally be aiming for. But I mean, it's Netflix. I like Netflix. uh, and the one I think might be worth doing is O. I've been doing uh, a lot of puts in my Roth IRA. Most of them have been on O. Back when it was in the 60 to when it was bouncing between 58 and 62 range. I was selling like 60 strike O's, and the Roth IRA was just collecting all that premium. And I think it might be time to look for that next iteration of O. I do this in my IRA because if I was to get assigned O at like these prices, I'm fine holding it, collecting the dividend, and selling covered calls on it. So I'm basically running the wheel in the IRA for my entire Roth IRA. uh, so this might be in my IRA portfolio, not my taxable account. So you might not see this trade in my trade logs. Another thing I want to say is keep an eye out on Palantir. They have earnings on 5/11. If they dip, you could be pretty sure that I'm going to be selling some puts on them. If they go up, then I just missed that train. Oh well. So keep an eye on Palantir on 5/11 to see how they act. If you're in positions already, maybe close those out to take that risk off the table just in case earnings are bad and it tanks, or they release some bad news or something like that. But if they do dip, then you can sell contracts. IV will be higher because of the volatility happening, and like it I love seeing stuff tank on earnings. It just gives me an opportunity to sell puts against it. I love it. So I'll be watching Palantir next week. Another one I put on here is Intel, the 6/11/52/50 strike. There's not much to say about that. I mean, it's a small return. I think it's pretty safe. Not quite Dave safe. It's only 87%. But just to get something out there that's different. And I actually can't believe I put Rocket on here, but I actually went and bought some leaves on Rocket. If you look at the chart, KT. I actually went to the chart. You can see, looking at the 1 year, like the all-time low is 1639. It dipped because of earnings, so again, like I was just saying, I love seeing stuff dip on earnings because you can usually get a nice price and some nice premium. Head back over here. And anyway, at the time that I was looking at this, the premium is like over 1%. So $17 on a 15 strike, that's nice. Probably out of the money. Not sure how much I believe that, since it's still trying to decide what it needs to do after earnings, like 86%, give or take. So this might be one I'm gonna put on because it's a small amount. Like the margin requirement is gonna be very minimal. And I apologize for not having the margin requirements up here. Interactive Brokers is doing some maintenance this week, and when I was gathering all this information, like it was down. I couldn't log in to get that, so that's why those are blank. I might fill those in by the time this video gets posted. Alright, and I think that wraps it up for Thumper's shopping list for this week. Like always, below is going to be the Discord channel link. If you're not already in it, I highly suggest going into it. It's completely free. There's a lot of like-minded people trading options, helping each other grow, and like we all get rich together. Alright. Thank you for watching. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.